Good morning, everyone. Today is Wednesday, the 30th, and let's quickly look at the charts again. But it will be a very quick one today because I am only going to be looking at US30, and you guys should know that it's towards the end of the month, the first week of every month. Typically, I kind of am very careful if I'm trading just because it's there will be a lot of rate folders and so on. So we do want to kind of just be very, very careful with our trades. But let's do a quick recap on where we were yesterday. And having said, like, we have a daily time frame at the moment. And this is where we left our markers off yesterday. And I said we have to keep a very close eye on this two lines here, if you can see, which is the basically the open and the close of this red candle. If you guys can see where I'm hovering, I'm going to make it bigger. I'm actually just going to hover at the bottom so that it's not here, this candle here. So basically what it did, it came here, did a touch on the bottom of the candle. And so we can expect that wick now. You see, like what we've said before, this is the entire liquidity zone. And what we can expect is now it's touched the close of the candle, is what we did say that possibly it might. And you can see that today's candle basically is just forming at this point now above the support resistance lines, right? So really two things can happen. This is considered, can be considered a fake out if you were to ask me. So basically what I will do is I'm just going to do a quick one here. So I will consider this a fake out as of now. I mean, at the end of the day, it could come right back down and go further down. All right, I'm not saying it's not, but let's just assume this is a fake out. Possibly what can I'm just going to give you guys some scenarios of what can happen, okay? It is going to go back up a little bit, and it is going to come back to touch the zone, okay? And obviously it is going to fly, okay? Or literally, it could basically go back up, re- do a rejection here, come right back down out of the zone and test it. Oops, test it, and then start going all the way down. And we have to bear in mind there is another liquidity zone here, and so therefore I would also do the same concept of, if there's going to be a fake out, and then we will wait for it to fly up, do a retest on this zone and basically do its upward momentum, or reject it and then come back down, retest the bottom of the zone and go back down again. So these are the possible scenarios on the daily momentum right now. But what I am going to do, oops. What I am going to do is drop down and have a look to see where we are. Okay, let's, sorry, I'm just going to go back to the daily, and I'm just going to delete all of this. And I also just want to emphasize to you guys that, me doing this markups and this analysis and sharing with you guys, whether it's my losses for the day or if it's my wins, it's just, I started this channel as a form of accountability to myself, because I do believe that trading is a journey where all of us just grow and improve our skill sets on a daily basis. And I do know of really, really excellent traders who basically lose trades consecutively, who have lost multiple funded accounts, and yet they can still trade very well. And it's just one of those things where we do have our days where we are we are really smashing it, and those days where sometimes we do get chart fatigues and it's just not our day, and it is all right. So for me, I started this channel just to kind of just share my trading journey, at the same time inspire anybody who is actually struggling in their journey, to kind of just keep the momentum going and know that it is a journey, and appreciate the journey, and just keep going, keep learning, unlearning and learning. And I really, really, this is how I truly kind of feel when it comes to trading. Like, we just have to keep going and unlearning our mistakes, and just keep on watching new stuff and trying new strategies, because sometimes we kind of get stuck on one particular strategy and we think that's the only way to do it. But I don't think so. I think it's just about trying different things and then finally figuring out what actually works for you and what actually keeps you profitable, if that makes sense, you know? And so I do want to say that my strategy is I have tested so many, like I have said in my videos before, like I have done order blocks. I've done support resistance strategies, trend lines, breakout strategies, fractals. You know, there's so many different things that I have personally tried myself. And right now, and at this moment, let's say, okay, I actually really do like my moving averages and my pin bars. Like, kind of keeps it very simple for me, and it also forces me to keep to the rule, you know, because I do have a tendency of like, oh, the breakout just happened here, but my moving averages are all over the place. And I just would go in after a retest. Most often than not, I have lost trades before. So I kind of like and I struggled to keep myself profitable just when I was doing so many different strategies at one go. You know, and so what I do right now is basically just keep to this main strategy of mine, which is my moving averages. And when I see a bearish or a bullish pin bar print and I'm with the trend, I'm taking the trade. You know, but I also kind of like to always do a top-down analysis. So bearing in mind that if I am trading against the main trend, which is the bigger time frame, on a lower time frame, I'm trading against the trend. I will keep in mind to keep my stop loss really, really tight. But often my stop losses are as tight as possible, and I do keep my trades like really, really profitable in a sense that you know my stop losses are small and it's a 1:5 ratio or risk to reward ratio, and I do kind of adjust and trail my stop losses as I go along if I am keeping the trade longer than what I normally would, right? So I just want to just put this out there because some of you may think that, hey, you know what? I did not wait for a retest candle, but when I'm actually kind of doing, you know, the bearish pin bar, the bullish pin bar, the pin bar method with the moving averages, typically I don't really need to wait for a retest, if that makes sense, you know. Well, I do know it's a downtrend. I see the moving averages line up, for example, like this, for example. Do you know what I'm saying? Like it is fanning out right now. You know, it here. If you look at where my cursor is, this is all over the place, and it starts to kind of break out and start forming. The minute I see a bullish pin bar form here and print, I'm going in and I'm keeping my stop loss just below that, really. And I'm going for the trade. Over this would have given me possibly 1:1.5 ratio. I would have come out if I still decided I was going to hold the trade, which in this instance I would not have just because of the resistance line here, my support resistance line. So true enough, did go up, reject it, and it did come back down and go back up again. So I do believe actually I did take this trade at some point in the week, in which I would have showed you guys. So I came out here and then it did go back down. And obviously there was another bullish entry right here and we could have taken it up again. So if we are on a proper trend, you are going to get multiple entries in one trend, if you guys can see. Okay, we had another entry here, but this I would have been stopped out just because my stop loss would have hit. I would not have gone all the way down. If you had kept your stop loss to the 21 moving average, which is the white one in this candle instance, you would still be in a trade and would have ridden all the way up. But in my instance, I don't think I would have done that. Just because this is a 1 hour. If I had been on a 5 minutes, I might have given it a bit more buffer room for my stop loss, but I would have put it right below, which I would have definitely been stopped out by this red candle. Yeah, I would think so. So this would have turned out as a loss for me just because of my stop loss, but typically the trade was profitable, right? So I would have waited for another entry and I would have got in if I wanted to. But at the end of the day, I would also look at the divergence indicator. So if it is showing a trend reversal or a slowing down of a momentum, then I would also not enter because you also need to know when is enough, like when is the trend going to reverse, and even if the bullish pin bar, the bearish pin bar prints, should I enter? Now the divergence indicator is actually a good one to help you in making that decision. Right, guys? So, like you can see, there's a trend reversal here. It came down, and right now it's on a downward momentum, as what we did say in our analysis for the past few days that it is gonna go down. which it did, and possibility of it now basically going to the zone below, or even going, there's two zones that we have drawn up. So we just got to see what price action is going to do. At this point of time, it is fanning out. Um, yes, there is rejection pins here, so possibly it is going to go for a down eye. So this is a bearish pin, but if I had gone in, I would have been faked out anyway, taken out just because of this long wick here. So again, guys, it's just a case of I personally do think it is still going to go down, to be fair, on a lower time frame. It is actually going to go for the bottom of the wick. So basically what I would do right now is just wait for another pin bar to print and see where it goes, and I'm going to take it down unless it shows me otherwise. But on a lower time frame, 15-minute, you can actually see there's a consolidation going on. So again, that is why I'm actually a bit more cautious in going in for a sell, just because of mm, just because of how it is actually teetering on this area right now. You can see the bottom of this space. So I would actually I would wait a little while. And also on the lower time frames, you can see that it's not really fanning out as it should be. So I would literally just wait a little while. I'm just going to drop it down to the 5 minutes to see what it's doing. Yeah, if you can see on a 5 minute as well, guys, I'm going to off this thing a little bit just so that it gets a little bit more um clearer. Hold on, guys. Okay, right. So you can see this, it's actually still messy on a lower time frame as well. So typically, I think US30 for today, I would, yeah, I would basically just wait it out a little bit just to see what it's planning to do. Because like we did say, it did do a fake out on the daily. Look at that. It did do a fake out right now. It could just be teetering around here. Do you know what I mean? It could just be ranging like what it did here. Not to say we still can't take a trade, because even within ranges, you did get a good momentum push up and down. So it could just be a consolidation on a higher time frame, but you might get nice entries on a very low time frame, like 5, 15 minutes, maybe even the 30 and the hour. But again, I just feel like it's going to just teeter around here before it actually decides what really it's going to do, whether it's actually going to go push up um it's going to continue on the downward trend. So keep your eyes on. See, this is the upward momentum, so you can actually see it's still uptrend on the 1 hour. So just be very careful if you're trading against the trend. Okay, so this is again a trade that I would not take on this hour. Yeah, so I would not take it on the hour just because it's trading against the trend. So I would drop it down till I get the mom. See, this is all messed up as well, so it's not really fanning out. So 15 minutes is probably going to be my best bet at the moment till it still has got to fan out properly. It hasn't done what it needs to do. 5 minutes is getting there slowly. So I would basically watch the 15 minutes for myself until it fans out the way I want it to, bearing in mind that the overall trend line here, it is a buy. Okay, it's still a buy on an upward trend at the moment. So we do want to make sure that if you are trading against the trend on a lower time frame, just keep your stop losses tight and be very, very careful. But as of this moment, at this time, um, I am I don't have anything really setting up, though I do feel like mm, yeah, to be honest, I don't have any assumptions to make. I do think, sorry guys, I do think that I would wait it out to see what movements we get before I kind of like am confident to see that, okay, no, it is definitely going to push up or it's going to go downward a bit more. At this moment, I just feel like it seems to be pushing down, but it is a consolidation zone. So I would actually just wait a bit. And today we do have a couple of red folders, I believe, when I checked it this morning. So you guys want to go to Forex Factory as well and just check to see what folders. I'm pretty sure we do have USD folders, red folders coming up, which is news, and that is around 1:15 in the afternoon UK time, 1:15, 1:30, 3 o'clock, as well as oh, sorry guys, I think this is for tomorrow. Oh no, it is today. Okay, so it is today. I was like, really, that many folders? I don't think I saw that. But okay, so anyway, 1:15, 1:30, 3 p.m. and 6:30 p.m. all USD red folders today, and it's really the first week of every month roundabouts. It's basically the NFEs, and it is the non-farm employment change. And during this week, the charts really get volatile, and so if you are not used to trading those, you would really want to be very, very careful with your trades, because honestly, personally, myself, I just don't like trading during the week because it never goes according to what we think it wants it to go. Especially US30, it will give me the long wicks, take everybody out, and then it will go back in the direction that I wanted it to go. So typically, I kind of just stay away from it during the trading of the news, or I literally trade way below my lot size, just for the fun of it. But as I say, just be careful just because of this week of the non-farming thing. But otherwise, trade safe, and happy trading for the week, and see you guys back tomorrow. And like I've always said, you can apply the same strategy on what I use to any pair. Like you could basically go to any pair, or the USD, for example. Wait for it to you can actually see it's starting to form a fan out right now. And then start to go to the dailies. Start with the 4 hour dailies and have a look to see where price is at this point. So it is a downtrend on a daily, for example. It is consolidating, however, on a daily. So if you drop down to the hour, you can actually see it's really messy with the moving averages. Do you actually want to be in this trade? Sometimes it's really, you are better off not being in a trade that you don't want to be in, because it's just going to drag you out. The anxiety builds up, and it's just messy. Okay. And so for me, that's what I said. I like this moving averages strategy just because it makes it so clear that um I don't even need to sit down and think like, should I go in, should I not? Just because this tells me straight away, no, you're not going in. So it just kind of helps me make the decision a lot better, rather than me making impulsive decisions and impulsive trades. Okay, so you guys can kind of apply that to any pair you guys want. And as usual, if there's anything you guys want to ask, do shoot it in the comments, and I'm happy to share what I know and how I do it. And if I don't know, then I don't know. But if I do know it, I'm happy to share it. And if there's any pairs you guys want me to look at, please put that in the comments too. In the meantime, happy trading, and see you guys tomorrow.